Hey traders, welcome to Charts and Coffee. Happy Thursday, everybody. Hope everyone's doing great. All right, so couple things to kick off the show. Probably the first thing, if you haven't watched it yet and you want some context for the kinds of setups that I will be looking for and the mindset associated with them, check out the free video from Tuesday. There we go. Check out the free video. I'm going to go back a little bit. There we go. Bouncer bottom. Check out that free video from Tuesday where I really got into, number one, are there places you can still buy in this market? Yes, but it's an ever-receding pool of symbols that are still maintaining a double green, mostly focused around gasoline and natural gas. There's a couple of other uptrends rooted in currencies that I discuss in that video as well. Why we're continuing to buy the dollar, frankly, why we've been buying the dollar all year long. This is not a new trade, okay? So how do you continue to engage a really nice, established, mature, respected, macroeconomically sound trend? That video will definitely explain that. So there are places that we can look for the long side. And then there are places, which is really the rest of the market, that we'll look at to the short side. So the reason I called this bouncer bottom is because when we had that rally, a lot of folks who have been saying the bottom's in, the bottom's in. What I just try to encourage is please, please, please don't get in the habit of, number one, clicking on the clickbait of this is where the markets are going, especially if it's some outlandish target, right? The only person whose targets I'm interested in are Powell, right? When he wants to give me his S&P target, I am all ears. Everything else is just conjecture. So what we want to remember is trade what we see, and then what we see will map to what we do. And that's the mentality, the process that I hopefully really got across on Tuesday's video. Now, telling everybody to stay short just happened to look brilliant on Tuesday because of what happened yesterday. But please know it's really more a function of the downtrend that we're in. And in what we call a double red downtrend, where the momentum is bearish and the trend is bearish, the higher probability setup will not be, I think I found a bottom, I think I see a bottom, I feel a bottom, whatever our lower intestine seems to be communicating about the market. We want to remember that we want to short the rip. In the same way that we have the conviction and the confidence to say, I want to buy the dip in an uptrend. It's really not that different. However, downtrends are far more volatile. I mean, they really are far more volatile because of, well, the bottom pickers who just insist on thinking they found the bottom. Gang, whatever that bottom may eventually be, give or take, 5%, don't worry about missing it. When the bottom is in, now the exception to what I'm about to say is if Powell comes and suddenly changes the messaging around the monetary policy. And that is a good bit of luck. And might he do that? Sure, we've seen V bottoms created on that before, but it's really galactically stupid for any one of us to think we can front run that. I'm going to buy the S&P because I think Powell's going to change his monetary policy messaging. Please don't engage in that. Please, please, please. So this is kind of my 3-minute plea to trade what you see, accept what you see, and focus on trends. In this case, we really want to be open and welcome to playing those downtrends. And all this is doing, gang, is instead of buying calls, we're buying puts. So please, this is a tradable market. Just don't fight the trend, right? Just don't fight the trend. So there you go. I step off my soapbox because I know a lot of people are struggling. And first of all, if you're looking at your investment accounts, please remember your time horizon on those is usually years. So when you map out where you'll be 3 or 4 years from now, chances are it's not going to be lower than now, because a lot of us know the only reason that the Federal Reserve is hiking rates is so that they can cut them later. And maybe that's going to be, mid to late 2023. I don't know, but we kind of know TikTok, very likely, right? Very likely. Okay, so then the next thing is, don't look at your investments day to day to day to day. Please don't. That's not why you have them. And it's a longer time horizon. Look at them maybe once a month. Look at them maybe every 2 weeks, right? Know what your wish list numbers are in terms of those pullbacks that you've been waiting for. That's why we have now every quarter in the Sector Secrets Mastery, a quarterly, hey, what's happening on the weekly? What's happening with sector rotation? We have a long-term time horizon view of the market. We do that as well. But we don't need to do it much more than about once a quarter. That gives us a really balanced look at the objectives of our longer term portfolio. And as traders, look, we can trade as the market tumbles, right? Please accept that in some corners we're going to have a downtrend. And that's also what we've been doing. One of our members, and I don't mean to be salt in a wound, but I really want to encourage everybody to remember that you can make money. Many of you probably are. One of our members said, hey, I'm down $1,100. The Dow is down 1,100 points or whatever it was at the time. And, I'm green. That's what I like to hear. That's what I like to hear. That's what I love to see happen in the simpler community, right? Where we support each other. We trade what we see. Anyway, now I'm really done. Let's go ahead and get to the questions. And, I've been where many of you are when the markets are tumbling and looking at my investments and looking at the downtrends and thinking, what do I do? That's what I do. I trade what I see on a shorter term, daily time frame, or 5-minute time for my day trade. It's shorter compared to my investment time horizon, which is usually a weekly. So separate the two, right? Separate the two. All right. And Battlehawk says, smash that like button. I appreciate that, friend. Thanks, Gavin. I do appreciate that, friend. One of our Sector Secrets members. So a little biased, maybe Gavin is. Thanks, buddy. All right. RF asks, as always, love the content in the mastery. I'm trading a small-ish account. I realize account size is relative. Of course, my friend. On trades where I take a one contract position, should I exit at T1 or hold for more gains? RF, when you're building a small account, take the T1, move on, right? That's it. That's it. Take the T1. Eventually, as the account grows, you can start to trail stops, go for T2s. But in the beginning, take the T1 because you're really trying to build the account. Now, when you're in that sort of segue between, Rag, I'm just on the verge of that second contract. I'm really a very accomplished one contract T1 trader. You can trail the stop, but I really don't love that. I'd rather you take one contract to the first target and then look for the next trade. Okay. And I obviously that's less than ideal. And when you can move to two contracts, that's where you can start saying, all right, T1, half the position off the table, move to break even. And then we get really ambitious with T2. Thanks for the question. Excellent question. Hey there, James. How you doing, my friend? Thoughts on Heinz? Yeah, we were talking a little bit about Heinz in the room yesterday because of that sell-off. Minor low, 200. We're going to be opening up around 38.80. Okay. Really what I'm looking at is, in this case, 200 propulsion. Let's see if we can't get a minor low. This is not what I want to focus on for the book, but there's a number of markets that fell. We looked at the FTRI ETF. I believe it was FTRI ETF yesterday. Is that what the name of it was? FTRI. There it is. Food and beverage ETF. And I believe it was the food and beverage ETF, although these are not the food and beverage stocks. But take a look at FTRI. There's some interesting moves there as well. But minor low, 200. And don't have a lot of these kinds of trades on your book, but a couple of them are absolutely fine. All right, next up. Hey there, Alan. Gold. Downtrend. Is it a pause candle? For what? Right? You're looking to get long? Can't. If you go back to that mindset video on Tuesday, where I pretty much pleaded with everybody for about 11 minutes to look for shorts. um, Alan, I can't then, and it's by design. My tools are by design to override the dumb part of my brain, which sadly is probably most of it, right? But hey, if you've got that small part working and loud, you're fine. But there's that part of my brain that says, I can pick the bottom. I know where the bottom is. Maybe it's at the Darvis here. That's a fact. 1780 could be very interesting for a fade, but my tools are designed to tell me, no, that's not even something that is open to consideration. And once I've gone red momentum, red trend, Alan, there's no buy. So pause for what, my friend? I'm not looking to get long. However, to your point, we can get the 200, 1850, bottom line of the wave, 21 EMA, long puts. I'll be looking for a small position long puts. Keep an eye, though, also, Alan, on the real yields or real interest rate chart that I've given you all in the mastery, the link to. Remind me if you need it on Friday when we do our Ask Me Anything session. Until that real yield starts to drop, gold is going to have a ridiculously difficult time finding some footing. So thank you for the question. Great questions. I think there's a lot of folks thinking, Ron, we got a nice Darvis area here. Can we buy it in a double red? Even when the stochastic is saying we're oversold, remember, when you're looking at a slow stochastic, it's an indicator that's designed to take advantage of a market doing this. And it also does this. It just dolphins across your screen, right? Just purposing across your screen. If you've been watching F1 this year, you've watched all those cars porpoise across the track. That's what the stochastic does, right? That's what the stochastic does. But in a trend, it doesn't get, it's not calculated to calibrate to a trend. It's going to always think a downtrend is oversold, oversold, oversold. That's why we do not listen to a slow stochastic or any kind of oscillator in a trend. And that's something that very few traders get, that there's certain indicators that are great for chop and other indicators that are great for trend. And you need one for each, and you need basically a set for each, right? You need a set of indicators and approaches for trends. You need a set of indicators and approaches for chop. So this is a downtrend, my friend. I personally cannot and will not look to buy a bottom. Maybe it bounces and that's cool, but the higher probability is shorting resistance. Thank you for the question. All right, next up, Tim asks, can I please break down why I chose 4820 as my T1 on VZ? All right, so I'm looking, I get a lot of questions about, Rog, why did you pick that level? What? So the answer is usually this, and this is the true answer. I'm not trying to blow it off. Support, resistance, volume ledges, Darvis levels, major psychological levels, gaps. 7 things I'm always processing. That and 32 years of doing this. So I try to show you the things that I'm calculating, but some of it's a little bit of experience, but a lot of it's just, this one's pretty simple. Look at the volume ledge. Look where the ledge starts, right around 48.20. We have a little gap right around 48.37, which is going to close around 48.20. That's it. That's it. So again, support, resistance, Darvis, gaps, psychological levels, volume ledges. We're going to have that set bit of tools that we just always look at to determine, hey, where have we stopped before? Where could we go to next? And do I have more than one reason to think that that level is going to hold? Because every level on our chart is a reaction level, right? This is what I've taught for years. Support and resistance. Why do we put anything on our chart? I put those dots on my chart because I think the market's going to react to them in some way. We put moving averages on our chart because we think price is going to react to them in some way. Stochastic, candle patterns, you name it. The only reason we look at anything is there's going to be a reaction. And then there's only one of 3 things a market can do. It can accelerate through that level. It can stall at that level, right? And or reverse. That's it. Accelerate through, stall at, and or reverse. That's all the market can do. So if you keep that in mind and start looking for reasons for a level to, and by the way, where we are right now is a little bit of a volume ledge. So if we're going to continue lower on this open short that we have, so Tim's talking about a trade that we have going on in the mastery, which is going to open pretty nicely at an unrealized profit. I say unrealized because I haven't hit my T1 yet. But this will be a really good test, this area around 48.60. We can break that. I think the T1's probably, well on its way. So I hope that helps. Next up, aggro, moderate, conservative are three possible entry points. Yes. If you can only afford one, should it be conservative? Or in light of your comments, get some skin in the game, should it be aggro? Weezy, if you can afford two, one neat thing that a lot of members do is they'll take one aggro and one conservative and skip the moderate. If you want to do moderate conservative, that's fine. That will, so aggro conservative is a neat way to have a little bit of skin in the game and not necessarily have to spend again at moderate. And of course, the spend is part of risk, and risk is, what is it going to cost me if I'm wrong? Everything we do as traders has to be predicated on what if I'm wrong? Not this trade could 2x, who the heck knows? But what is it going to cost me if I'm wrong? So everything is oriented to risk, and as is your question. So awesome. An aggro conservative split is fine. What I'll always say, Weezy, and this is why we make risk management and position sizing pretty much the video and the lesson that we bombard you with in the mastery, which is that holy grail video. Know your position sizing, and then you will also know your risk. Make sure that risk doesn't exceed the allowable. And then at that point, frankly, Weezy, you have the flexibility to build it how you would like. And that's what I would like, that you all have the ability to determine your own risk, not follow someone else blindly, which, by the way, doesn't work. And now when your head hits the pillow at night, you're not assuming my risk tolerance or somebody else's risk tolerance. You're playing within your risk tolerance, which is the only risk tolerance that matters. So thank you for the question. Nacho, what happens if you've been eyeing a perfect setup for a while, double green or double red, and then the day you get on the entry, it turns double yellow? That's fine. That's fine. If it goes yellow, that's not unusual for a market to go a little neutral with the retracement of a trend. It's not unusual. The thing I'll add is, did it break the wave? Right? Did we change color of candles? The other thing that I would say is what's happening with the other stocks in that sector or within that index. And you might want to find out, if it was a move that was above, outside the historical volatility, just poke around and find out, maybe it was an analyst upgrade or downgrade, some kind of, what was the news? Because most news doesn't have traction. Most news is going to affect the market for a session or two. We waited, case in point, Grandpa Buffett reveals, and I say Grandpa Buffett endearingly, Grandpa Buffett reveals that he bought Citi. Grandpa Buffett also has a time horizon of about 7.2 million years. That's not a trader's mindset. So Grandpa gives us our correction. Thank you very much. Then we wait a day, because I'm going to respect very much the influence that individual has in the market, and it is immense. That's just respect for the kind of psychology that can accompany someone of Warren Buffett's stature revealing a position. What was interesting too is he almost dumped all of his Wells Fargo, and that didn't move that much. So I want to measure the impact. We gave it a day. I remember about 30 or 40 minutes before the close, I was going back and forth with, I think, Lorna Bot, and I said, hey, I really want to short this Citi. It's already fatiguing. And I said, you know what? Let's wait till tomorrow. Let's get our pause or inside candle. Even I need to be prodded, because part of me says, let's grab this, but I got to stick with the process. It's always process, never prediction. I don't know what this market's going to do, but it's pretty probable if it's been heading lower, it's going to keep heading lower. So probability, not prediction. I've come to the point where whenever I hear anybody predicting where the market's going to be a week from now, the end of the month, the end of the year, just stop it. Stop it. There's a great Bob Newhart so Lorna's my left hand, Trish is my right hand here in the office. And Trish has this great video. Bob Newhart, you remember that show? There's a video of him. It's a skit, or it's a segment from the show where he's just sitting there, and you can Google or you can YouTube search, stop it. Keep that video handy. I play it all the time. And this woman's going through all her issues and all the things that she wants to improve in her life and the things that she needs to stop to be better. And he just says, stop it, Stop it. Watch it. It's hilarious. And that's the stop it button we need in our brain. So I wanted to front run my process, right? Whenever we hear predictions, stop it, right? Wait for the pause candle and short it. And then now it's going to keep moving in our favor. If that went neutral for a moment, it doesn't hurt us to wait, Nacho. It doesn't hurt us to wait, right? If that pitch is not in your zone exactly where you need it to be, it's not going to hurt us to wait. So anyway, check out that stop it video. It's excellent. That's the button that we need. Prediction, stop it. Where the markets are going to be at the end of the month or the end of the quarter or the end of the year, stop it. As if anyone knows. And yet, we kind of let that slide in the trading world. Stop it, right? So we react to what we see, and then that maps to what we do. That is what that video on Tuesday was all about. That is what has kept me short. Not guessing at the market keep going down. It's already going down. It doesn't take a lot of smarts to follow something when it's going that way. All right, gang. I hope that everyone here can calibrate to what we're talking about. If you continue to need some help, hey, just join us here in Charts and Coffee, and I'll just show you what I see, right? That's all. And we'll go from there together, and hopefully we can navigate this market in a very productive way. Okay. As always, gang, thanks for being here. Thanks for caffeinating and dominating. I appreciate the time. I appreciate the questions. I appreciate y'all smashing that like button. Leave your comments, leave your questions below. I'll see you tomorrow. Same time, same station. Be good to each other, gang.